Alright, let's kick things off by setting up a 15-minute time frame Bitcoin chart. But don't worry, the strategy isn't limited to just Bitcoin. It's versatile enough to be applied to a wide range of other assets and markets like funds, stocks, futures, and more. You're free to pick any time frame you prefer, whether it's a fast-paced 1-minute chart or more laid-back daily chart. This buy-sell indicator strategy is perfect for traders of all kinds. The first indicator we'll use in this strategy is the squeeze momentum indicator, which can be easily located in the indicator section. Simply type its name in the search bar and voila, it'll be right there for you. Now, the squeeze momentum indicator is a remarkable analysis tool that brings together the power-up capability of Bollinger Bands and Keltner channels. This indicator is particularly useful when trading in sideways market because it can identify periods when prices are stuck before they make a sharp move. But before we dive into using it, we'll need to make a few minor adjustments to fine-tune the indicator for our strategy. First, navigate to the settings window and click the input section. Here, we'll tweak a few parameters. We'll change the B length to 21 and set the BB multiplier to 1. Then, we'll adjust the KC length to 21 and then the KC multiplier to 1.5. These changes will optimize the squeeze momentum indicator for a specific strategy. Moving on to the Style tab, we'll modify the first plot option and switch it to columns. We'll set the color 0 to green and color 1 to white and the color 2 to red, and for color 3 we'll make its opacity 0 since we won't be using it in this strategy. Finally, we'll disable the second plot option. Alright, now we're going to add another indicator to our chart, but before we dive into that, let me quickly mention that at TradeGenius YouTube channel, we've developed over 300 strategies for all kind of trading style and methods. So be sure to subscribe to get access to all of them, along with any new videos we release. Back to the strategy, the second indicator we'll be using is called WMA Ribbon. To add this helpful tool to your strategy, head over to the indicator section on TradingView and give it a click. In the pop-up window, you'll find the search bar where you can type in WMA Ribbon. Once you've located it in the results, just click on it to add it to your chart. It's that easy. Now that the 4WMA ribbon is on your chart, let's go ahead and optimize its parameters for a strategy. Head to the settings and click on the input section. Here, you'll see a list of parameters that you can adjust. First, change the L1 parameter to 21, then set the L2 parameter to 45. Moving on, we'll modify the L3 parameter, changing to 90. Lastly, we'll leave the L4 parameter at its default value, which is 200. Now let's talk about the rule of 4WMA ribbon in our strategy and how it can help us make money. The 4WMA ribbon is an essential tool for understanding market conditions and deciding when it's the best time to enter trades. When you see the 4WMA lines are bunched up together almost as if they're sticking to one another, it means the market is in a consolidation phase. Essentially, it's taking a breather. During this period, it's best to hold off on trading because the market isn't clearly trending in any particular direction. On the other hand, when the WMA lines are nicely ordered from short term to long term, 21 above 45, 45 above 90 and 90 above 200, and the price candles are above all the lines, we can identify an uptrend in the market. In these situations, we'll be on the lookout for buying opportunities since the market is moving in an upward direction. However, there will be times when the price moves inside the 4WMA lines. Even though they are still in the correct order for an uptrend, during these periods, the market is experiencing a correction wave, which means it's not the best time to enter a trade. Take a look at these examples for a clearer picture of what I mean. In the next example, we can see that the 4WMA lines are flat and sticking together, indicating a sideways market. As mentioned earlier, we don't want to trade here. But as we move further along the chart, you'll notice that the lines shift to a more orderly arrangement. 21 below 45, 45 below 90, and 90 below 200, with the price below all the lines, a clear sign of a downtrend. However, the price later moves above some of the lines, signaling a correction wave. Again, this is not ideal time to trade. Then you'll notice that the lines shift to more orderly arrangement, with the price below all the lines, a clear sign of a downtrend. So now let's talk about how we're going to use this strategy to enter trades and make some money. When we've identified an uptrend in the market, we'll be on the lookout for buy signals from our trusty squeeze momentum indicator. You'll know it's time to gear up for a potential buy signal when you see the first green bar appears on the squeeze momentum indicator. We'll call this our buy signal bar. To find out the corresponding candle on the chart, draw a vertical line from the buy signal bar. This will help you locate the signal candle. The next step is to confirm the buy signal, ensuring that it's a good time to open a buy position. To do this, check if the closing price of the signal candle is above all 4 WMA lines. If it is, congratulations, your buy signal is confirmed and you can now go ahead and open the buy position. Of course, as reasonable traders will want to set a stop loss for a trade. This will help us limit potential losses in case the market doesn't move as expected. For this strategy, we recommend using the most recent swing low as your stop loss point. Now, we'll use the risk-reward ratio of 1 to 1.5 to determine our exit point. And when the market is in a downtrend, we'll be looking for a sell signal. Similarly to the buy setup, we'll wait for the first red bar on the squeeze momentum indicator, which we call it a sell signal bar. Draw a vertical line from the sell signal bar to locate the signal candle on the chart. Next, confirm the sell signal by ensuring that the close price of the signal candle is below all 4 WMA lines. If it is, the sell signal is confirmed and you can proceed to open a short position. For a stop loss, use the most recent swing high to give your trade a room to develop while still limiting potential losses. To exit a profitable short trade, apply a risk-reward ratio of 1 to 1.5, just like we did for the long trades. Alright, so now that we have our strategy all laid out, it's time to put it to the test. We conducted a backtesting experiment on the Bitcoin 15-minute chart, analyzing 100 trades over a 7-week period. The results were truly impressive and I can't wait to share them with you. After completing the backtesting, we found that our strategy achieved a remarkable win rate of 72%. That's right, 72% of traders were successful. This goes to show you just how powerful this strategy can be when applied correctly. But it doesn't stop there. During this period, we were able to generate an impressive 120% profit. To put that into perspective, our initial investment more than doubled in just a short time. The strategy's performance was further bolstered by a profit factor of 3.86. For those unfamiliar with the term, the profit factor is calculated by dividing the total gross profits by the total gross losses. A profit factor above 1 indicates a profitable trading system. So a value of 3.86 is quite impressive. Now let's talk about consecutive wins and losses. During our backtesting, we experienced 6 consecutive winning trades at one point, which is a testament to the strategy's effectiveness. On the flip side, we also had 3 consecutive losing trades, which serves as a reminder that even with a solid strategy, losses can and will occur. Finally, the max drawdown, the largest drop from a peak to a true in our trading account balance, was a manageable 2.97%. This indicates that while we did experience some losses, they were relatively small in comparison to our overall profits.